Hello everyone and welcome to Day Trader S&P 500. Today is Wednesday, August 24th. This is Dale Woodson, editor of Woodson Wave and Day Trader S&P 500. We're going to get all of our YouTube subscribers caught up with what's been going on the last few days. We're going to take a trip around as usual. We're going to start with the Qs. And you can see again we have a completed 5-wave pattern, 1 down, 2 up, 3 down, 4 up, and 5 to complete the larger wave A of intermediate degree in parentheses. And you can see we've had a move up to between the 382 and the 500 retracement for wave B. Make a note that the B wave retracement to date on August 16th is below the 50% retracement. Again, the NASDAQ, or the Qs in this case, lead on the way up and lead on the way down. If this was a new bull market, this NASDAQ would be leading, but as you'll see when we get to the ES and the S&P, it's lagging. So that's another case for this being a counter trend bounce higher and not a new bull market from this June 16th low. I want to look at the S&P. I want to remind you guys of the big larger term or larger degree of trend. We worked this back last week from the 2009 low, from the 87 low and the 82 low, and mathematically, and you know it's all math and I'm just reporting the numbers, mathematically this works out perfectly. What I mentioned last week was this fourth wave expanding triangle actually corrected this move up here. So we had a 1, 2, 3, 4, and that is 5, as you can see there, at a couple, well, several degrees of trend. But I want to make note, this is a Fibonacci 5 years, okay? This is a Fibonacci 13 years, wave 3. This is a Fibonacci 8 plus 1 years, wave 4. This is a Fibonacci 13 years up to 2022. So mathematically, it couldn't work out better than it has. And if we look at, this is obviously a weekly log chart. We're going to look at the S&P from that all-time high. You can see we've got a 1 down, a 2 up, a 3 down, a leading diagonal 4th wave, and a 5th wave to make, again, the larger wave A in parentheses, which is intermediate degree. And here's that ABC up. And here's where you can see that the S&P cash hit right on the 618 retracement, okay? That is higher than, let's go back to the Qs. The Qs fell short of the 500 and obviously short of the 618. So they're not leading. The S&P is leading, and we'll see. Well, the Qs are leading on the way down. That's the key right there. But you can see there is the B wave right on the 618. That's good unless and until that is broken to the upside. That becomes our make or break on the intermediate degree of trend. And you can see it's sold off from there. And if this is A down in red, and this is B up in red also, then wave C gains equality with A at 32.64 in the cash market. Let's move on to the ES. We're looking here at the daily of the futures. Again, same thing. 1 down, 2 up, 3 down, 4 up, and a 5 to make the larger wave A. And then we've got the A. I kept or 1 in there, and B or 2, and C or 3, because this is the big make or break here. The 39.50 on 628, I believe it is right there. Okay, when this decline moves below this high, then that won't be a 3 because that can't be a 4 because 4 cannot go below the high of 1, if that makes sense to you. So we've got an A, B, C up or a 1, 2, 3. And the first confirmation that that is the B wave high on an intermediate degree of trend will come with a break below this wave A high at 39.50. Until then, we have to allow for that to be more of an impulsive pattern, if you will. We'll see how that plays out. But again, A down here, B, sorry I got that in a different color. Let me just match it up here real quick. All right, so we're all together on the same page. There we go. A down, B up, C equals A at 31.60 in the futures. That's at the intermediate degree of trend on a daily chart. Okay, let's look at the hourly, working our way down. And you can see from that high right there, we've got a 1 down, a 2 up, 3 gained, a 2.618. I think I had it at, this might be off by a point or two, at 41.15 and some change, and ended up at 41.10. Okay, you can see our fourth wave corrections there. All right, let me show you guys. I think we'll get that pre-market report where I had this in there. Let's see if I can pull that up here. Here we go. Make sure I got the pre-market here. Yeah, pre-market this morning for our monthly subscribers. Yeah, we changed our positions of rating services there. 3 down was a near direct hit. You can see it better in the picture here. The target, or the 2.618 multiple, was 41.15 and a quarter. The actual hit 41.10. That was within 4 points, less than 4.5, something like that. And you can see here our retracement targets for wave 4. Okay, wave 4 up cannot go below the wave 1 low, which happens to be 42.55. Let me see if we can see that on there. There it is right there. There is the wave 1 low. It's off a little bit. That's at 42.55. There's our Fibonacci retracement targets for that. And let me get to the morning report we put out this morning. Let me get that out here real quick. This was at, I think, 9:05 a.m. Central Time. There's the morning report that we put out to our monthly subscribers. And this 4 up is taking on a 5-3-5 pattern, if you will. It's 5 up, 3 down, 5 up. Okay, so this first is A up, B down, C up to make the larger wave A. Then we got A, B, C down for the larger wave B, and then we should get a C up. There's our targets. This was put out just a little over a half hour after the open, exactly 32 minutes, and we're looking for 41.52 as our first target. You can see the other Fibonacci targets up there. And let's see where this went. Let's get, there's that same thing on a 1 minute. Okay, and there is that near perfect hit on wave 3 down near the 2.618 multiple. There's the A up, there's the B down. This morning at 9:02 we were looking at our target of 41.52. It hit it, went in between so far, in between the 1 and the 2.72. You can see the targets there. And we might expect this. By the way, this is live. It's about 1:20 right now, p.m. Central Time. You can see the 1 minute chart ticking there. Let me see what this retracement is of this wave up. This would be A of C there. Okay, that went just beyond the 618 retracement there. Okay, and that B was a 618 retracement. This B here was a 618 retracement of this A there. Okay, then we got B down, and this is A of C, B of C. I'll just mark that for you guys. Okay, here we go. We'll put this will be, let's do it a little bit bigger and better where you guys can see this. This would be A of C. This would be, let me get it in here, B of C. There we go. And then we would have a C of C. Let's do a little assumption here. I hate doing assumptions. You know what they say about assumptions. Let me move this aside. Let's see what this is live. I haven't done this yet. Figured this out. But let's get this A up. Again, assuming that that is the B wave low. It's between the 618 and the 786. You can see our first target there is 41.69. Then we've got a 41.79, a 41.84, and a 41.92. And let's get back to our picture here and see what that looks like from the morning report. There we go, up to 41.71. But let's look at the bigger picture, and there were our targets to the upside there, going up to 41.85, 42.08, 42.31. Again, that 42.55 is the make or break. Let me get you guys back to the bigger picture here. Here we go. Work our way back. That is the daily. That's the move down. And there is the hourly from that high. And let me get you guys one more look at the pre-market open. That's the bigger target I was looking for right there. Okay. So, by the way, this does not have to go up there. We've seen in the previous moves down, like back in January and February, these retracements were small. They were minuscule, and the power of the downtrend was too strong for the counter trend bounces. So this C wave should be stronger than the A wave, and I'll show you guys right here. There's the A wave down right there in parentheses. There's B. You can see this at a 45-degree angle. C should be sharper and swifter and more, not a straight line down, but closer to it than the A wave is there. Okay. All right. We'll leave you guys with this here. We'll see how this thing plays out. Will 4 get to one of these targets before the next wave down comes? And oh yeah, one more thing. Let's show you guys. Didn't want to forget, and we did a lot about this in the Elliott Wave Hub last week. Thank you guys for joining that. But I want to show you guys we have the 820 turn date on the daily sequence from 329. Okay, and the 816 hit a high. Okay, and then the next one chronologically in the sequence is 825, which happens to be tomorrow. So wouldn't it be something if that marked two different highs, a high of 2 different degrees, the 820 being off by 3 days or 3 trading days, not sure which one it was. It was 3 trading days, and then the 825 is coming up tomorrow. And of course, you know, we've got Jackson Hole and Powell speaking. So like our subscribers say, show us a wave count, we'll tell you the news. So we're looking for news because wave count comes first and the news follows. Okay, that's it for, there's that bigger picture for today. And until next time, take care, everyone.